We're joined now by the CEO and Head of Research at Macro Hive. That is Bilal Hafeez, who joins us this morning on set here in London. Good morning to you, Bilal. So let me start with the Fed then and expectations there. So if the markets are right, 75 basis points, I know that that's your expectation as well. What else is going to be interesting, though? Is it going to be about what they signal in the pace of hiking for December 2023? Is it going to be about the terminal rate? Because they could say, you know, the pace might slow, but we might keep going longer. I mean, how are you watching for what they do on Wednesday?
Yeah, I think there's a couple of things. One is the pace of hikes, especially for the meeting at the after the December meeting. You know, are they going to go another 75? The other is the terminal rate, as you say. Also, there will be a focus on their commentary around things like financial market conditions, because a lot of people have said the Fed's hiked, stock markets are up, so the Fed hikes aren't really working. So that's another element of this as well. My overall sense, though, is I think that people are too premature in looking at pivots and pauses and such. And I think people are underestimating the resolve of the Fed to raise rates faster and longer than people expect.
Yeah, a view that might chime with yours then, Mark.
Yeah, Bilal, good morning. Absolutely, I think that's the kind of the longer term view, that I think that rates may have to go higher. I just wonder about this week. If you think that this week some of the pivot hopes might be dashed, in which asset are we going to see that most clearly? Is it going to be disappointment in equities, or is it going to be about yields and the dollar heading higher again?
I think both, in reality. I think the issue with earnings, with equities, is that we have earnings season at the moment, which contaminates the picture a bit. So I think the initial moves will be more in yields than the dollar. You know, the dollar has weakened somewhat over the past few weeks. So I think we'll see a turn in the dollar. We'll see yields go up as well, curve flatten as the market starts to move away from pivot talk. Then it will start to feed through to equities. But because of earnings season, it does muddy the water a bit.
With other central banks, though, you do see a pivot slightly sooner, perhaps. Maybe the Bank of England, and that's coming on Thursday with their rate decision, crucially ahead of the 17th of November autumn statement now. So a little bit perhaps more in the dark around the fiscal side of things than they would want to be. But what are your expectations for the Bank of England? We had seen the market pricing in 100 basis points, now back to 75, so sort of similar to the Fed.
Yeah, I think the Bank of England is in a tough situation. I think they'd hoped that there would have been the fiscal policy or plan announced already so they could act on that. So I think that, as you say, they are flying blind somewhat. The other thing to note with the Bank of England is, in general, over the last 6-7 months, they have been trying to fade the inflation spike in general. So their bias always has been to try to talk down the prospect of a protracted series of rate hikes.
Because they've talked about recession a lot, very openly.
Exactly. They're talking about 5% declining growth, which will bring inflation down. And I think they will reiterate that as well this week. So my sense is they'll do 75, but then talk down further rate hikes by them.
So, Bilal, you basically think a dovish 75 from BOA, a slightly more hawkish 75 from the Fed. Obviously, that would imply cable downside again. It's been a complete change of narrative there. Cable is trading at 116 or near about 115.90, higher than it was before Liz Truss became Prime Minister. Obviously, she's no longer Prime Minister now. What is it for cable? Are we going back to parity as everyone was very excited about only a month ago, or has it bottomed for the year?
My sense is I think we are going to see cable fall as we go into the end of the year. So I'd be bearish on the pound. I do think that there's been a couple of factors. There was the switch in policy by the UK around fiscal after the mini budget. We saw the pound go up, and then we've had general dollar weakness. But I think going forward, I think the picture on the UK policy side is going to be more difficult. Tough decisions will have to be made. The honeymoon period for Rishi will likely end, so that will lead to pound weakness. Then on top of that, as we talked earlier, you know, with the Fed reiterating its hawkish credentials, that should also see the dollar go up as well. So I'd be in the bearish cable camp.
Can I ask you about your takeaways from earnings season? Because I was looking at some of your notes, Bilal. Really interesting to think about earnings. Yes, they give us clues about the macro and the economy and all of that good stuff, but also about the geopolitics. And you've seen really different geopolitical signals in what we've heard from Germany and what we've heard from the United States.
Yeah, I mean, for me, that's been the most interesting thing. You know, we've had earnings from both Europe and the US, and for me, the most interesting thing is if you look at a German bellwether company like BASF, the chemical company, they're doubling down on China growth. They're increasing investment in production facilities there. At the same time, they're cutting costs in Europe, in Germany in particular. They're shutting down factories. Meanwhile, on the US side, if you look at a US tech company like Apple, which is very much involved in China, they barely mention China in their outlook. And I think there's a recognition by US companies that there's a geopolitical shift going on, that they have to move away from China, whereas Germany is actually doubling down on China despite this increasing tension with China. And so for me, that's a big story from this earnings season.
And that's not just a sort of deft communication strategy from Apple, trying not to attract too much political attention. It's you think in the underlying data you're seeing
Absolutely.
that.
If you look at investment in China by Apple, it's been declining for the last 3-4 years. So there's been a notable decline. At the same time, there's been an increase in investment within the US and in non-China Asian countries as well. So this is a strategic move and a recognition that the geopolitics around China changed.
Bilal, I love that geopolitics takeaway from earnings. Okay, 2 months till the end of the year, 2 days before the Fed. Make it very clear, what's the single best trade between now and year end?
I think for me, it would be to be long dollars into year end. And also, I would also like to be short US rates as well.
Long dollars on what cross?
Against European currencies, so against the euro or against the pound would be my preference. So I think we've had the good news out of Europe. Nat gas prices have come off; they're starting to base now. We've had this good news around the UK recently, the fiscal policy U-turn. All of that will start to turn down, and at the same time, the US Fed cycle will start to pick up again.
Okay, so bad news for anybody who was looking for a little bit more good news on the European FX stories. Thanks very much, Bilal. Thanks for your time. Really good to speak to you this morning. Bilal Hafeez, the CEO and head of research at Macro Hive.